Welcome back, everyone, to the deep dive. You know we love getting into the nitty-gritty of these companies, and today we're really diving deep into Mankind Pharma and their performance for Q2 of fiscal year 2025. We've got a lot to cover, as always. We've got their investor presentation, we've got their official reports, and this is going to be fun.
Yeah, it's interesting, isn't it, how they're not just surviving, they're actually thriving. I mean, 13.6% year-over-year revenue growth, that's impressive.
Yeah, 13.6% growth puts them at 3,077 INR crore. It's a big jump.
Yeah.
And it seems like they're doing a good job of making sure that growth is profitable, too. Their EBITDA margin was really strong, 27.7%. Even Rajiv Janeja, the vice chairman and MD, seems pretty happy with that.
Oh, absolutely. And he's been pretty vocal about, he's happy with the growth in the margins. But what makes this even more impressive is there are a few key factors driving this. We're seeing a recovery in volume. They're seeing really strong performance in their chronic segment. And honestly, they've got some really smart operational strategies in place.
Let's unpack that a little bit, starting with their domestic business. How are they doing there?
So if you look at their secondary sales, and remember, that's basically measuring how well their products are moving, from those distributors to pharmacies and ultimately to patients, that's up 8.6%, which is actually beating the market.
Okay, so they're outpacing the market.
Yeah, the overall market growth is sitting at 8%, so they're doing better than average there. But here's where it gets really interesting.
Not all ears.
Their volume growth was more than 3 times what the market saw. I mean, they were at 1.3% growth. The market was only at 0.4%.
Whoa. Okay, so people are really choosing Mankind's products over the competition.
Yeah, it seems like their sales strategies are really hitting the mark.
So they're winning on volume and value. But, every company faces challenges, right? I'm assuming it hasn't been completely smooth sailing.
You're absolutely right. It's never easy. They have had to deal with some regulatory challenges that impacted a few of their products. And like a lot of companies right now, they're working on making their field force even more efficient.
Right. Trying to do more with less.
But even with those hurdles, they've managed to hold on to the #1 spot for prescriptions for the past 7 years. 15.4% market share. That's not just winning, that's domination.
7 years at the top. That's amazing. It's got to be hard to stay on top for that long. And speaking of successful strategies, their chronic segment, that seems to be a real bright spot for them. What's driving their success in that area?
Well, it's growing like crazy, 13.3% year-over-year growth. And to put that into context, the overall market growth for that segment is only 10.2%.
So they're way ahead of the curve there.
Yeah, and this is important because those chronic medications, those often lead to recurring revenue. People need them long term. It shows they're building a loyal customer base.
That's a great point. I'm sure everyone listening is wondering, what are some of those specific products that are doing well?
Oh, there are definitely some stars in their lineup. First up, their insulin glargine product, Nobeglar. That one's seen incredible growth over 100%. Clearly, they're tapping into that diabetes market effectively.
Wow, 100% growth. That's amazing.
Right. And they're not putting all their eggs in one basket.
Mm.
Their respiratory inhalers, CombiHale and Symbicort, has seen a combined growth of 22%.
Makes sense with all the respiratory illnesses going around these days.
Yeah, that's probably a factor. And then there's Crenslow. That's their inclisiran treatment for cardiac lipid lowering. It's new, it's innovative, and it's really starting to gain traction.
I've heard good things about inclisiran, so they're not just sticking with the tried and true. They're investing in new therapies, too. Now, I know they've made a big move with their consumer healthcare business. They spun it off into its own subsidiary. What was the thinking behind that?
Yeah, they're letting that chick fly solo. But strategically, this allows them to attract investors specifically for that consumer healthcare business. And it lets them sharpen their focus on the core pharmaceutical side of things. And even before the spinoff, that consumer healthcare business was doing really well. 20% year-over-year growth in Q2.
Wow, that's impressive. What are some of the key brands driving that growth?
It's the usual suspects. Manforce, Gasifast, and HealthOc, those are their big hitters.
Yeah, I've heard of those. Even I'm familiar with those. Are they doing anything special to promote these brands?
They are. They've been using brand ambassadors to boost those brands, like, Sunny Leone and Kartikarian for Manforce.
Using star power to reach a wider audience, that's a classic strategy. So we've talked a lot about their domestic business and their moves in consumer healthcare, but what about their international presence? Are they making any waves outside of India?
They're quietly killing it. Everyone focuses on the domestic business, but their exports are booming. 59.3% year-on-year growth in the first half of fiscal year 25.
That's huge. So they're not putting all their eggs in one basket.
Exactly. It's smart to diversify and reduce their reliance on any single market. And they're actually walking the walk. They just launched a new product in the U.S. that brings their total to 42 products available there.
So they're putting their money where their mouth is when it comes to global expansion.
Okay, so we've looked at their revenue streams. We've talked about their strategic moves in different market segments. But none of that matters if the financials aren't solid. How's their financial health looking?
Really strong. They've got a strong balance sheet, and their cash flow's looking good. They're sitting on a net cash position of 3,260 INR crore.
That's a lot of cash. What does that mean for investors?
Well, it gives them a lot of flexibility. They can invest in research and development, they can pursue acquisitions, and they can weather any storms that come their way. And it means they can offer good returns to their investors. They're boasting a 30.5% return on equity and a 35.3% return on capital employed.
Those are some seriously impressive numbers. Now, for someone like me who's not a financial expert, can you explain what those numbers actually mean? Sure, those are key ratios that investors look at to understand how well a company is using its resources to generate profit. So that high ROE of 30.5% means that for every rupee invested by shareholders, Mankind is generating a great return. And the high ROCE that just further confirms that they're using their capital efficiently to make money.
So they're not just growing, they're growing smart. It's clear Mankind is doing exceptionally well right now. But where do they go from here? What's next?
Well, they're not resting on their laurels, that's for sure. They've
Oh.
got a roadmap for continued growth, and it's pretty ambitious. And that's what we'll dig into next.
All right, so we've established they're on a roll, but I'm curious, what are some of the actual steps they're taking to make this happen? What's on their agenda for growth?
Well, a lot, actually. Remember how they acquired Bharat Serums and Vaccines Limited BSV? That was for a whopping 13,768 INR crore.
Yeah, that was a big one. To be honest, I don't really know much about BSV. What's the significance of that acquisition?
That's a good question. BSV is a big player in some pretty specialized segments like gynecology and critical care. They're known for their work with things like recombinant and niche biologic products, innovative delivery systems, and immunoglobulins.
So basically, they're bringing a whole new level of expertise and product offerings to the table. Sounds like Mankind is expanding beyond their traditional strengths.
Exactly. With BSV, they can now cover the entire pharmaceutical value chain, from those mass market products to those specialized chronic treatments. And now they're getting into super specialty care.
That's a bold move. And you mentioned earlier that they're doubling down on their chronic segment. What are some of the specific therapies they're targeting within that segment, and why is that such a smart move?
Good question. So they're making some strategic plays in a few key therapeutic areas. For instance, they've partnered with Novartis to in-license Neptaz. That's a treatment for heart failure. And they're also in-licensing Krenslow, which uses inclisiran to address high LDL cholesterol.
Yes. Inclisiran. I've been hearing a lot about that lately. It's a totally new approach to lowering cholesterol, right?
Yep, it's an injectable medication that only needs to be administered twice a year. That could really change the game when it comes to patient compliance.
Yeah, that's huge. People forget to take their pills all the time. So it makes sense for Mankind to invest in these cutting-edge treatments, especially with cardiovascular diseases being such a major health concern globally.
Absolutely. And their focus on diabetes is strategic too. They've in-licensed Nobeglar, which is an insulin glargine product. That's from Biocon, another big Indian pharma company. This lets them tap into that rapidly growing insulin market, especially for type 1 and type 2 diabetes.
And we were just talking about the incredible growth of Nobeglar. Over 100,000 prescriptions a year. Seems like they've really found a winning formula there. What about their presence in the respiratory segment?
So the respiratory segment is seeing a lot of growth too, partly because of the increase in respiratory illnesses and, of course, the lingering concerns about COVID-19. Mankind is well positioned to capitalize on that.
Right. They acquired CombiHale from Dr. Reddy's laboratories a few years back. That gave them a strong foothold in the inhaler market.
Exactly. And more recently, they secured an exclusive distribution agreement with AstraZeneca for Symbicort in India. That puts them right in the premium segment of the respiratory market.
So partnering with a global leader like AstraZeneca not only gives them new products, but it also boosts their credibility.
Absolutely. It aligns perfectly with their strategy of moving into those higher margin specialty products. It shows they're not just competing on price anymore, they're emphasizing innovation and quality.
Okay, so we've covered chronic treatments, consumer healthcare exports, acquisitions. Seems like Mankind has a lot going on. But with all this expansion, do you see any potential risks or challenges?
Well, managing this level of growth is never easy. Integrating A big acquisition like BSV that can be really complex, you're basically merging two companies with different cultures, different ways of doing things, and even potentially competing products.
That's like a corporate marriage. You need a solid plan and clear communication to make it work.
Exactly. There's always the risk of losing key people during those transitions. And then there's the challenge of getting rid of redundancies and making sure both companies are on the same page.
It sounds like a lot to juggle. And what about staying ahead in the innovation game? The pharmaceutical industry is always evolving.
Oh, that's a huge challenge. Research and development is expensive, and it takes a lot of time. It's a constant race to develop new treatments and get them to market before the competition.
And they're not just competing with other Indian companies anymore. They're up against global pharma giants with massive budgets.
Exactly. While their in-licensing deals give them access to innovative products, they really need to build up their own in-house R&D capabilities if they want to be a major player long-term.
And with all these acquisitions and partnerships, there's the risk of overextending themselves financially.
Yeah, that's a valid concern. They need to be careful about taking on too much debt, especially with the economy being a bit shaky right now. It's a balancing act between aggressive growth and financial prudence.
It's a tightrope walk for sure. And then there are the regulatory hurdles. Those are always a factor in the pharmaceutical industry.
Absolutely. Getting drug approvals can be a long and unpredictable process, both in India and in international markets. One regulatory setback could derail a whole product launch.
So having a solid regulatory strategy is crucial. It's a complex landscape. And we can't forget about the human element. Attracting and retaining top talent, especially in specialized fields like oncology and transplant, that's got to be a challenge.
It is. Building a strong team with the right expertise and experience is key. But finding and keeping those people in such a competitive industry, that's an ongoing battle.
So we've talked about the opportunities and the potential pitfalls.
The big question is, can Mankind Pharma navigate all of this and actually achieve their goal of becoming a global leader in pharmaceuticals?
Yeah, it's a tough question. But here's what I find really interesting. It's not just about profits and market share for them. They actually seem to be committed to sustainable and responsible growth. Their ESG initiatives really stand out.
Right. And their focus on environmental sustainability is particularly impressive. They've actually achieved plastic neutrality, which means they're offsetting their plastic usage through recycling and waste management.
That's great to see. It's easy to talk about sustainability, but actually doing it, that's another story.
Exactly. And they're not stopping there. They're aiming for carbon neutrality by 2030, which is a pretty ambitious goal, especially for a company in the pharmaceutical industry, with their complex manufacturing processes.
So they're thinking long-term about their impact. What else are they doing?
Well, they're really focused on water conservation, trying to reduce their reliance on groundwater. And they're even exploring the use of hydrogen gas for their manufacturing operations.
Hydrogen gas.
Yeah, it's a clean fuel source. These are big commitments that show they're serious about reducing their environmental footprint.
It's good to see a company taking these things seriously. It's not just about checking boxes, it's about making real changes.
And their social initiatives are worth highlighting too. For instance, they've had 0 reportable lost time accidents across all their manufacturing units.
Wow, 0 accidents.
Yeah, that's a remarkable achievement. It really shows their commitment to workplace safety.
That says a lot about how they treat their employees.
And here's something you don't see every day from a pharma company. They're putting in place a wildlife conservation plan.
A wildlife conservation plan. What does that entail?
Well, I don't have all the details, but it shows they're thinking beyond their own operations. They're considering their impact on the environment and the communities around them.
That's pretty unique. And from a governance perspective, what are they focused on?
They're really emphasizing stakeholder engagement, making sure they're meeting the highest standards of compliance and ethics, and promoting transparency in everything they do.
So it's a holistic approach to sustainability.
Yeah, it's about building trust and adding value in the long run.
So as we wrap up this deep dive into Mankind Pharma's Q2 FY25 performance, it's pretty clear that they're a company on the move, driven by ambition and a commitment to responsible growth.
They've laid out a bold vision for the future, one that combines financial success with a positive impact on the world.
Whether they can achieve all their goals well, that remains to be seen. But their journey so far is definitely worth watching.
It's a fascinating case study in how the global pharmaceutical industry is evolving.
And it leaves us with a lot to think about. How will their growth and their commitment to sustainability shape the future of healthcare, both in India and globally?
That's the million-dollar question.
It is, and that's something for all of us to consider. Thanks for joining us on this deep dive into Mankind Pharma. We'll see you next time.